Economic damage has been deep. We got a read on GDP for the second quarter, a shocking more than 30% decline. How long is it going to take, from your point of view, to get out of that hole?
Yeah, my guess is it's going to take a meaningful period of time. I don't pretend to be an economist and we'll be able to predict this any better than anybody else. What I do believe is there's a dislocation in spending, and it's focused more on the home right now. And during that period of time, I think brands that serve people for personal care or home care will benefit. In terms of the economy, I have tremendous confidence both in the U.S. consumer and more broadly, people doing what they need to do. Once there's an opportunity with a vaccine to get back out, that we'll see the green shoots pop up pretty quickly. How quick that'll be, I have no idea. Whether it's a U, a long U, I think it's anybody's guess. And so what we're trying to do is at least be ready for whatever comes at us to serve consumers and to also help our communities.
From your vantage point, though, and you see the consumer pretty up close, how badly do we need another stimulus package, which is currently at a standstill in Congress right now?
Certainly, I believe many consumers right now are very stressed and concerned what will happen. To date, in our categories, we haven't seen a big drop, but I think you see it in many of the other categories that are more discretionary than the categories that we play in. In many ways, our portfolio that's focused on daily use items where performance really drives brand choice have been preferred. But I think to your point, I think absent that, people will naturally try to save more and be ready for a difficult period. And certainly in our business planning, we're planning for a potential COVID period to be most of our next fiscal year, which is 12 months. And I think that's the smart way to be ready and hope for better, but be ready for this thing to last for a while.
So how do you prepare for that? Because the last recession, you saw sales get hit as consumers traded down, went to generic products that were more value priced. I know you haven't seen that yet, you said in the conference call, but how are you insulating the portfolio or thinking about pricing to avoid that?
I think it's a good question because certainly we learned a lot from the last recession. One of the things we needed to do is make sure we had a broader price ladder so that if people needed either lower cash outlay or a different price tier, that we have products available. And an example would be laundry with Simply Tide or Tide Simply. You want to be available in various price tiers. The same is true in grooming and many other categories. So versus last recession, we have a broader portfolio, a range of price tiers, and we've strengthened significantly the superiority of our brands. And again, people are making choices on generally in our categories, low cash outlay items. And I think they're going to reach for trusted brands that perform. And the more we can increase the superiority and be available at whatever price tier and cash outlay they want, I think we're better positioned to weather the storm this time.
You know, there have been warnings that it could get bad again in the fall, along with flu season. How are you preparing the manufacturing plants and the supply chain to make sure that if we do have another period where we need to lock down or stay at home, like we saw earlier this year, we don't run out of key basic supplies like toilet paper or paper towel?
It's a great question because we spent a good bit of time looking at the resilience of our manufacturing system and the full supply chain. From the time this first hit, and even before then, we had worked on what we call business continuity plans, which says what happens if a certain supplier were to go down, do you have an alternative? We've done the same with our contract manufacturers as well as our own manufacturing operations. So at least as best we can, we're prepared. We want to make sure that we've got multiple sources of key raw materials. We've generally increased inventories where we're able to do so and able to meet the demand to be ready for what I think could be a more volatile period.
You mentioned that China was back to growth. Is it back to pre-pandemic levels? What have you seen there as they have reopened their economy? And what about places in Europe, too, that have reopened and that have crushed their virus curves?
Certainly, it's changed significantly month by month. In March and April, it was very, very difficult. May and June, we've seen a very strong rebound. And actually, April, May, and June in China. So China, mainland China, is increasing very nicely. You know, for the fiscal year, we ended up at 8% and growing very strong through the fourth quarter. So I see China on a path in our categories more similar to where they were pre-pandemic. Europe, it's just in the last May, June, you've seen pick up. June especially, we've seen a pickup. So we're encouraged. As you're aware, Europe had a longer lockdown period than the U.S. did. The U.S. was a pretty short period where we had restricted movement and then opened up quicker.